Never streamed before in my life. I'm probably a little bit older than I look, and I'm sure everybody is so used to technology, but I am not. So this is really exciting for me to test this out and to pop it across all my channels, stream everywhere, and just see what the experience is like. So today is very much me starting out as a newbie and sharing my streaming live event out there on my social channels. And I thought, what better thing for me to do than to chat property? That's kind of what I'm known for. So I went, okay, let me chat property, do a close off of the 2022 property market, as well as an opener to 2023. So I guess the thing for me is, before I begin, everybody I believe that would be watching would know who I am. So obviously I'm Cody Parker of Kitty and Miles. I'm the director, buyer's agent. I'm a mom as well. Some of you know my story. I am a rescue cat lover as well. So I like to think of myself as eclectic and a woman that wears many hats. I'm sure there are many women out there that their days are spending they spend their days wearing many hats. So I join you. I applaud you. I began my buyer's agent career not 30 years ago. I actually have not been in the buyer's agent space all that long, but I have been in the property space. I have invested as a property investor and managed to fall professionally into becoming a buyer's agent somewhat 4 or 5 years ago with my own company. But that's another story. We're not going to get into how I became a buyer's agent and what got me to where I currently am in the buyer's agent space. Today is more just having a chat about what has happened in 2022 in property and where I see the 2023 market headed. So I'm just popping into the chat box, keeping an eye on everything and hoping that the mic is fine, hoping that my video is fine. Let's begin. Let me just get straight into this. So the 2022 year in property in Australia was quite a mixed bag. It very much depended on what market, as in whether you're looking at capital cities versus regional areas, or alternatively, even which capital city you were looking at and focused on. Or we even can go a bit deeper. In each of those capital cities, there were micro markets, there were suburbs and locations that even performed differently across the city. So the 2022 property market in Australia was a myriad of different markets, all operating differentially. I'm based in Sydney, so I can start definitely with the Sydney market. The Sydney market in 2022, a lot of people heard on the media that there was a price point high circa January, February this year, and that from that point in time, prices pretty much exponentially declined month after month from the peak in January, February 2022 through to around about August. I started to see the transition really begin in August. But I think data, as far as the travel through of data, it really saw the bottom of the market end August, beginning of September 2022. From that point where we hit the low point, pricing started to stabilize. And in some pockets of Sydney, ironically, pricing started to lift ever so slightly. So this is not about saying, oh, there was a correction and we hit the bottom in September and, prices are going back up now. It was a case of, depending on demographic location, we very much saw the bottom of the market come across the board, but then different factors very much came into play as to what happened next. So what we saw was, with the interest rate hikes, with the RBA cash rate increases, and though the banks actually passing that rate shift on to mortgage loans, what we saw was the people in the more working class demographic, the people that really struggled and had very much, how would I say, they had stretched themselves with their serviceability and their finances were pushed to the limit, and with inflation rates increasing, we saw the working class demographic very much hit hard. And it was the property markets, the micro markets where these owner occupiers resided. They were the pockets that we saw once we hit the bottom of the property market in September. These areas stayed suppressed. So there, let's call it within 10 kilometers of the Sydney metropolitan area, 10, possibly 15, but definitely 10 kilometers of the Sydney metro area. Price points, in some of those areas, we came to see a bit of a lift, but they tended to be the properties that were at the higher end of the pricing structure that lifted and saw further buyer competition, whereas the demographics that were, we'll call it kind of this sub 2 mil mark or so, that demographic, the pricing tended to stay, generally speaking, in more of a stable declining mode. That being said, it makes it sound like there are, different demographics of property buyers and different locations that caused those pricing, or I should say, that experienced the pricing differentials. What it actually was it came down to the income, typically, and serviceability and asset base of property buyers. So the more luxury market and high-end market, those buyers rely far less on high serviceability and are hit less per se when it comes to increasing interest rates and additional payments each month on their mortgage. They can liquidate other assets, they can shuffle things around and bring that cash flow, into a better perspective. It's more those that, being honest, and is affluent, and the properties that these people were seeking are the ones that still the price point stayed reasonably subdued, and that's where more of the bang for your buying buck could be found in 2022. If we divvy that up even more, one could definitely say that the apartment market in Sydney probably saw, to be honest, more of a struggle. And that tends to be because the apartment market is predominantly serviced by investor buyers. And it's very much the investors that had paused. A lot of them had paused with the interest rate rises, and also with the even though we haven't had border closures, the latter part of this year, it's taken time for those international border closes. We still don't have the immigration rates, and we don't have the international visitors to the same level we had pre-COVID. So the international money isn't coming into the Sydney property market in the way that it had pre-COVID. And what this means is the unit market in Sydney just hasn't picked up to the same extent that the owner-occupier market has across the year. So very much driving the market in 2022, very much in Sydney, it's been the owner-occupier market. Owner-occupier buyers have definitely driven the Sydney market. This has been the case for Melbourne also. When we move into some of the smaller capital cities around the country, that's when we see the market performed very differently to, say, Sydney and Melbourne. And in particular, one of the, I'll leave Brisbane to the side. Brisbane has been lifting for a while. We've been seeing growth there. But definitely in the last, say, 12, 18 months, we're speaking 2022, we've seen Canberra and Adelaide have been really strong performers in both the rental market as well as the buy market. The prices in Canberra and Adelaide, their growth metrics over the last 12 months have been pretty stellar, really stellar, comfortably in the double digits. And I think what has driven these markets is across the board, we do have, owner occupiers, coming in that have been waiting for prices to become more reasonable post 2021. So we have a number of owner occupier buyers coming in, knowing that the pricing is more affordable for them this year, and them trying to get that pre-approval and get in the market before further interest rate lifts. So it really did start to bring those buyers into the market in 2022. And Adelaide and Canberra, such a good entry price point for buyers, that they really saw the time was ripe to capitalize and buy after 2021. But the interesting thing that occurred in these cities, due to low stock and due to the eyes from Sydney investors and Melbourne investors, looking at these smaller capital cities, seeing the price point and the strong rental market, and understanding that they could deliver a really great entry-level investment for a property investor, Sydney and Melbourne investors turned their eyes to Canberra, Adelaide, not a lot of stock on the market. So suddenly you had quite a large demand from buyers in these smaller capital cities. And the demand came from not only internally with the owner occupiers, but from the interstate entry-level property investors. And stock was just flying off the market. Typically speaking, in each of these capital cities, you'd have one open inspection and offers were coming in thereafter. And the sales prices were, far higher than the price guide. And in cities such as Adelaide and Canberra, it's not actually necessarily the case that there's underquoting going on with sales agents. A lot of the price guides were extremely realistic. It just came down to low stock numbers and the buyers really competing for the stock that was available. And that's very much what happened. When we go across to Western Australia and we look at the Perth market in 2022, Perth is a very small property market, and a lot of the time investors from the East Coast can drive this market. We did see a number of East Coast investors stepping into the Perth market as the price point, again, very attractive compared to East Coast prices. The difficulty with the Perth market is, I always say to property investors, it's a more speculative market. It moves, it can boom very quickly and it can bottom out. So you really have to be keeping your eyes on what is happening in the Perth market and tracking it and knowing when to buy in, but when to liquidate as well. So Perth saw a slight turnaround, a slight movement in growth over 2022, and it had been a market that had been subdued. It had really declined from about 2011, and it had been in a pretty steady decline. It saw a correction probably in Q3, very much so Q3 2022. But the issue there is, as an investor, you really want to see that correction continue. Don't just wait for that upturn in Perth and think it's the time to buy in. You want to wait for at least another quarter. You want 6 months of solid growth happening in Perth, and I'd even say a little bit longer before you jump in. And you watch that growth. And as soon as there's any indication of a turn, you want to work out whether you're either going to sit and wait this out, and you could be waiting it out for a substantial number of years, or whether you take your money and run. Perth, I always see, is a market that's not for a novice investor, as it doesn't provide you with the solid security that some of the other East Coast markets deliver. Talking about, Tasmania and Hobart in particular there, that was another one. It has performed so well over the last few years, and it's only just starting its downturn. Probably it peaked in about July this year, maybe even a little bit, later. So Hobart is starting its little dip. But overall, generally speaking, what we can say is that while Sydney and Melbourne were declining this year, a number of the other smaller capital cities were negatively correlated with the decline in Sydney and Melbourne that we definitely saw in 2022. Adelaide, Canberra, Brisbane, Hobart for the first 6 months, steadily climbing, some really good capital growth occurring there. Fantastic, strong rental market. That's very much been 2022. Further, when it comes to the Sydney market in particular, it has been a market that you have to watch different locations and understand what drives the buyers in each and the sellers in each of these locations to know how to pinpoint what kind of stock, whether it's house or units, townhouses, villa, what stock is going to tweak with regard to price point and when. And definitely, again, in 2022, I could say fairly much across the board in Sydney, the most vied for property was definitely the house that was turnkey. So taking a renovated home that was well styled, where buyers could walk in and ooh and ah over that home. That was the property that was highly likely to have the most competition in 2022. If you had something that was modern but needed a bit of updating and didn't quite have that wow factor, those properties you tended to be able to negotiate that a little bit better, and you could get a better deal on those properties. As well as the ones that were actual fixer-uppers, they were ones that also you could very well get a good deal for those ones in 2022. So turnkey houses in particular in Sydney, you pay a good price point for, because the buyers that were out in force tended to be owner occupiers. And with rising construction costs and delayed timing with construction due to COVID, everything last year, it meant most people just didn't want to dilly-dally and pay for renovations or rebuilds or whatnot. Either the timeline that they would foresee would be too long, or the costs too high. So what they choose to do was just go for the turnkey. Go for the property that is move-in ready, as that's the one that will serve our time needs and our financial needs best. So these were the properties that really sold for, I guess, skated through somewhat the best in Sydney in 2022. Excuse me, as I've got hay fever. I've got this sniffly hay fever with the spring weather. That is very much, I'd guess, the recap of the best part of 2022. Touching on the end of 2022, I think this one is very interesting, and this is where I feel I can deliver the most value to people in lieu of moving into the new year. I do not feel that people have really cottoned on to how important the stamp duty reformations and the reforms in New South Wales have been, and that for first home buyers in this sub 1.5 million bracket, they will be stepping into 2023 knowing that they have the option of either paying lump sum stamp duty, which would be circa 40,000, 50,000 or so, compared to an annual property tax that equals, let's call it 2,000 or so. So it's pretty much a no-brainer here that first home buyers that are eligible for the first home buyer choice scheme, which is the stamp duty scheme, that the majority of first home buyers in the 900-ish K to $1.5 million budgetary bracket, they're going to opt for the annual land tax. What that means is property that's coming to market in Q1 2023 that fall into that budget range, that first home buyers will come out in force looking to buy, because they're the demographic that are looking long term. They're not looking for a quick buy. They're looking for something to call their home for the next 7, 10, 15 years. So whether interest rates are 4.7%, 5.3%, 6% or so, it's less relevant to this buyer demographic. They're going to be stepping in the first quarter of 2023 and exercising that first home buyer choice, because they will know they've got an extra, say, 40K in their pocket to either put towards their deposit or put towards their purchase. And for them, that's an incentive to get out and get into the market in the new year. And technically this kicks off from the 16th of January 2023. So it's very much going to be those first home buyers in that 900K to 1.5 million budgetary area that will all be coming in. They'll be looking to find their first home, and if stock levels stay at the low levels they're at, we are going to have far greater buyer demand than we have supply, and that organically leads to prices going up. Obviously, the cap for these buyers will be 1.5 mil. But if you're looking at a property, say today, that's 1.35 mil, by the time we move into late February next year and March next year, that same property is going to be pushed by this buyer demographic closer to 1.5. So if you're a first home buyer and you're going to come in and you're thinking of opting for an annual property tax, and you're going, yep, I'm waiting till next year, I'm coming in 2023 and I'm going to get my first home. So every other, Jack and Jill in that same category. So please be ready for what is forthcoming, and not even trying to do a spruik here, being absolutely honest. You will be the demographic that will be best served by a really good buyer's agent next year, because you will struggle with limited availability of online stock. There won't be a lot to choose from, and you'll be out there in the public arena vying with every other first home buyer in that price bracket, and you'll probably find that you'll miss out quite a lot. You'll struggle to buy. It will be a very frustrating, stressful, and difficult situation. So honestly, if you're looking to get in there as quick as you can, tick off 80% of your bucket list. Don't look for the perfect home. Just go, you know what? If this is 80% good, let me use my funds now and get in the market and build that equity, build that growth. You want to get in and get something that's workable early 2023. Don't wait. Don't wait a month. Don't wait 2 months. Don't wait 3 months. You will get stuck. The only alternative I foresee is, honestly, find a buyer's agent you trust and engage their services and get them to do the heavy lifting. They have greater access to behind the scenes off-market property, and that's where their value will really rest for you guys in early 2023. What else do I foresee in 2023? And this is not a crystal ball, I'm a data scientist. My background was, I'm literally like a statistician. Like, this is my thing, this is my gig, so I'm applying it to property. What is forthcoming in 2023 is, I know the media is hyping up a recession and, saying property prices are going to decline more. I really do believe that should the Reserve Bank and the major lenders only pass on, 1 or 2 very minor rate rises, I actually don't believe that that will lend itself to further decline in property prices across the major capitals. I speak for Sydney and Melbourne predominantly here. I actually feel that pricing will stabilize and not a lot will change, at least in the first 2 or 3 quarters of 2023, as long as we don't have huge spikes in RBA cash rate lifts or interest rate rises. I think if we have, 10 base points or whatnot, I'm pretty sure the property market will ride through that. And I don't foresee any greater interest rate lifts than that before rate rises stabilize, cash rates stabilize, and, we end up with some circa terminal, cash rate of, what would I say, probably like a 3.8, something like that. I'd say 3.8%, 3.5%. And I think that will carry us through 2023. When it comes to the smaller capital cities, I do think they're going to follow with a decline, further decline in Q1 2023, Q2 2023. The rate of that decline will probably be very much distinct between smaller capital cities. My prediction is that Brisbane is a small market. It has had quite phenomenal growth over the last couple of years, but the data is showing that the decline that has been experienced in the last quarter, excuse me, the decline is quite fast paced. So I do think Brisbane's market decline in 2023 will be a little bit faster per quarter than when compared to Adelaide and say Canberra. So if you are an investor in Brisbane, sit tight. I do think there's going to be a correction, but rental yields are sitting extremely strong there. So it may be one you just sit and wait out. That's why property, after all, is the long game. So I think that's probably touching, in a summary nutshell, what's in store for the property market in 2023. Depends on the capital city you're living in. Smaller capitals likely experiencing a greater rate of decline than Sydney and Melbourne that have seen a more substantial rate of decline throughout 2022. I foresee the higher end luxury market that has already experienced a decline in Sydney and Melbourne, probably sitting pretty stable, sitting pretty well there. In the smaller capital cities, it's likely to be the segment of the market that we see the most rapid decline. And that's typically the case. As for the units and apartment markets, I'm curious to see what will happen in Sydney in 2023 as we have higher interest rates at the moment. But I'm keen to see what greater immigration and international travel brings for the Sydney apartment market. There's some very good buys at the moment, and I'm sure investors will be, keeping an eye on that and likely coming in 2023 to snap up a bit of a bargain in Sydney and Melbourne, especially knowing that the rental market is strong. So the gross rental yield in Sydney and Melbourne is sitting pretty good at the moment, above 4%, above even 4.5% for units, and comfortably sitting above 3% for houses, which is really, really good. So that's my wrap for today. Thank you guys for joining. And if you'd like any further info, my website is listed there. I'm going to try and do lives more often and just bring everyone up to date where I can. I'd love to hear from you guys and always am open to Q&As and any further info that I can share with you folks. I welcome doing so. So hope you all have a really lovely day, and I will see you all again